So this is a sum of partnership, May June 20, paper 21. And this sum is related to two partners, that is Hamza and Noor. What you are asked over here is, first thing that you were asked over here is you have to state how the profits and losses are shared in the partnership. Second is why you recommend the partners to have a written agreement. Third is you have to prepare income statement. Okay. Then you have to prepare an appropriation account and then the current account. I have done the theory in another video. Now we are looking at the third part of how to prepare an income statement. I hope you are there with me.
Yes,
Yeah.
miss.
So
Yes,
whenever
miss.
you have to prepare an income statement, the first thing that is always necessary is that you have to do your marking. Doing your markings is a must. Okay.
Okay.
So if I do the markings, I see administrative expenses as other expenses. This is NCA,
Other.
and this provision for depreciation is the depreciation. Loan by Hamza is a non-current liability. Again, this is a non-current asset. This is income, and wages of assistant is expenses. OE. Okay. That means I see there is nothing related to purchases and sales. If there is nothing related to purchases and sales, it must be a service business where the only income is income giving services minus expenses. And I see over here this is a service business. Are you with me?
Okay. Yeah.
So now if you see, you will have income minus expenses, and I see expenses. There are only two expenses I can see, that is administration and wages to assistant. Yes?
Yeah.
Okay.
Hmm.
Whenever there is a loan, you should always have a star clicking to you. What should be the star? Whenever there is a loan, something should always strike you.
Okay.
What should strike you?
Um,
It's
that
a
is the
loan by
partnership.
partner. Whenever there is a loan by the partner, the thing that should strike you is whether given or not, interest on loan has to be provided. If no information is given, interest on loan should be at 6%.
Okay.
Okay, this should always be the shining point. Loan by partner is the riskiest item in partnership. With me?
Okay.
Now I have these adjustments. I should know the effect of these adjustments to be able to prepare my income statement.
Hmm.
So my adjustment says that administrative expense includes 1800 insurance for 3 months. What does this mean?
So for 3 months, it's prepaid.
Okay. Listen to me. When I say it includes 1800 insurance for 3 months, it means that 1800 is paid for 3 months.
Okay.
You'll
Yeah.
always divide it by 3. Okay. And this 3 month is ending on 29th Feb 2020. Whenever something like this is there, you will always go and see your year end. Your year end
Hmm.
is 31st December 2019. But I have paid till 29th February 2020.
Hmm.
That means I have paid for Jan and Feb extra, which relates to next year.
Okay.
2 months is not related to the current year. That means 2 months amount is prepaid. Okay. Jan and Feb.
Okay.
My year ends on 31st December and I have paid up to 29th February. 2 months is prepaid. So 1800 into 2 divided by 3. 1200 is prepaid. What is the effect of a prepaid expense?
Um,
Any prepaid is always minus, any outstanding is always added. So this 1200 should be minus from administrative expenses because it is prepaid. This would be my working note number one. Okay. If I'm
Okay.
making a
Okay.
statement of financial position, prepaid expense is a current asset. Other receivables.
Okay.
Okay. Just write it.
Miss, can you hear me?
Adjustment number two. Assistant works a 5-day week and is paid a weekly wage 350. What does this mean? 350 is paid for 5 days. Assistant works 5-day weeks and he is paid a weekly wage of 350. It means that 350 is paid for 5 days. Are you with me? Hello.